Since the beginning of 2022, we are living in a inflation data obsessed environment. So if you have been trading just for the last 2 years, you must have noticed that the markets are hyper focused on data like GDP, CPI, PCE, you name it, FOMC meetings, anything that the Fed says, any conference call that Powell has moves the markets like crazy. This is because of the high interest rate environment we are living in, and the markets are always looking for clues as to what's going to happen next. So, is the Fed going to cut rates? Are they planning to hold the rates, or are they going to hike the rates? And these rate hikes and cuts happen during FOMC meetings. So, during these meetings, they give us a decision whether the rate is being hiked, paused, or being cut. So there are 8 FOMC meetings in a year. Before these meetings happen, there is all this inflation data that keeps coming out, whether it's jobs related data, um, there could be GDP data, there could be the actual consumer price index inflation data. There's a lot of data points that keep coming in. So based on these data points, the markets are able to gauge with a very high degree of accuracy what the FOMC rate decision may be in the upcoming meeting. Of course, if these are all probabilities, so there is never a guarantee. So if you look at, like, if you go back 6 months ago, markets were expecting like 7 rate cuts this year. But now, if you look at the probabilities, there are only 4 rate cuts being priced in. So the probabilities are more accurate as the FOMC meeting date nears. So if there is a meeting coming up in 5 days, then you can look at this tool and figure out what the market is expecting. So in this video, I just want to show you how to use this tool to gauge what might happen in the next FOMC meeting. So the tool is called CME Fed Watch Tool, and you can actually Google it. So if you just look for CME Fed Watch Tool, the first link is for that tool, so it's very easy to find. Once you open that, you will see the next meeting is coming up in 27 days. And then this is the interesting part at the bottom, the actual Fed Watch tool. So the first screen shows current. There are some tabs on the left side, and there is a calendar at the top. And each date represents the next FOMC meeting and what might happen, what the market participants are guessing might happen. So in this case, it's showing you for the current date, the target rate is 525 to 550. And in the upcoming meeting, so let's switch to 12th June, which is what the markets are expecting, that the first rate cut might happen in June. So if you click on June, it's showing you this is the chances of the Fed maintaining the current rate is 40%, and the chances of first rate cut is 55%. So the markets are expecting a rate cut in June. Now these probabilities change every day, so you need to look at this tool like 5 to 7 days before the FOMC meeting. But the other interesting thing I find is on the left side there is something called probabilities. I use that mostly, and it has these two tables. This table shows you all the dates of the upcoming FOMC meetings, and the blue square shows you what is the highest expectation of the market of what might happen. So 525 to 550 is the current Fed funds rate. So the markets are expecting in June 55.5% chance of a cut, 25 basis point cut, which will take the Fed funds rate to between 500 to 525. And then there is a 3.8% chance of a 50 basis point cut. So this is how you read this. So based on this, you can just see the last meeting is scheduled on for this year is on December 18th. So we have 1, 2, 3, 4, 5 meetings left for this year, and the markets are expecting 1, 2, 3, 4 cuts. So their chances of cuts are now four. It was seven before the year. The table at the bottom is just a summary of what you are seeing at the top. So, for example, if you look at the June date, so it's showing you meeting date, then there is days to meeting, chances of a cut, which is ease, no change, and hike. These are the columns. And in the June meeting, it shows you that the chance of a cut is almost 60%. So where is this coming from? Because what we saw here was 55.5%. So all it is that you just add up all the numbers here, and that gives you the chance of a cut. Because even if it's a 50 basis point cuts, which has only 3.8% probability of happening, that is still adds into the projection of a rate cut. So that's what this ease is. It doesn't care about how many basis points the Fed might cut. It's just showing you the combined probability of a rate cut is 60%, and markets are not expecting any hikes this year or next year. As you can see, it's all zero. So this is a nice little summary here where you can just look at this column, ease column or hike column, to see where is the maximum probability of a rate cut or hike.